Hello, this is Jeffrey Cohen, Chicago Quantum. I've been thinking I should share with you the best dividend paying stocks every day. So today is April 6th, and we posted on Twitter the top dividend stocks based on our run last night of our Chicago Quantum Net Score model. This is from the up run, which means that positive net income actually means a few things. It means they pay a dividend higher than a highly diversified portfolio like the S&P 500. They have positive net income, so they've made a profit, accounting profit. They're liquid. They trade every day at least 1,000 shares, and they pass all of our data validation steps, which also means they've traded every day for the past year. They're U.S. listed stocks, so they're either on NASDAQ, New York Stock Exchange, New York Stock Exchange America, or BATS. And they're more efficient than the S&P 500 index ETF. So this is not common, right? Because a diversified portfolio is great, and these stocks individually are better in terms of efficiency. So let's go ahead and see what we got. First one, GES, Guess. Guess is trading at $22. It's a $1.3 billion market cap. It's got a PE ratio of 8.5, which isn't bad. Their forward dividend yield is almost 4%, so it's kind of nice to earn 4% on Guess. DDS, this one's interesting because it's counterintuitive Dillard's. So Dillard has a forward yield of 0.3%, but they paid a ton of dividends last year. They had a special payout or something like that. And if you take a look, the stock's at $257. It trades almost $5 billion. BX, Blackstone. Blackstone trades at $119.54. It's $145 billion. It's roughly a 15 PE ratio. It looks like it's going to pay forward a 3.3% dividend. This stock, as well as one of its cousins, shows up on our list, Qualcomm. So Jeffrey, what's up with Qualcomm? I thought all these tech stocks were in the toilet, but they're not. So Qualcomm trades at $139. It's worth about $157 billion, and it's a 16 times earnings, and it pays a 1.77 dividend moving forward. CG. Jeff, what's CG? By the way, you listen a few times, you're going to really know. It's the Carlyle Group. Stock trades at $45 a share. It's a 5.5 times forward PE ratio. It pays a 2% dividend. Interesting. APAM, $38, $2.5 billion. It's 7.5 times earnings. It's paying a 10.25% dividend. Mwah! Love a 10% dividend. VRTS. This is new to our model. This one just showed up. Interestingly enough, Virtus Investment Partners. Looks like an ETF, but I don't know. $227.30 a share. The valuation is $1.7 billion. It's trading at 8.75 of last 12 months earnings. It's paying a healthy dividend of 2.52. TPR, Tapestry. I don't know much about this stock. $33.73. It's worth about $9 billion. It trades at 11.4 PE. Pays 2.07% forward-looking dividend. AVGO. That's another one of those high-flying tech stocks that's having a really bad day today. Broadcom. Broadcom trades at a $602.47 a share. It's a little expensive for us to buy 100 shares, but maybe you buy one or two. Market cap is almost $250 billion. Trades at 34 times trailing PE. Pays 2.58% dividend. Now, what you would take away from this stock is it's a growth stock. People are counting on this stock to grow, maybe to double sales. And then next year, the PE ratio is 17. Feels like a bargain for a company that doubled their sales, right? That's how you think about it. Ares Management Corporation, they actually had a position in one of the stocks we own. By the way, we have no position in any of these stocks right now. Ares owned a bit of SMLP, which is kind of cool. $79 a share. It's worth $23 billion. It's 36, about 37 times PE, but it's paying almost 3%, 2.89%. Very interesting stock. By the way, down quite a bit. The 200-day moving average is 76. It's trading at 36. So, it's nice. Discount. AMP Ameriprise. Got our model picked this almost 2 years ago. It was the first stock ever picked by the Chicago Quantum Net Score. Ameriprise and Apache. It picked Apache at like $4 a share. I want to say it's like 40 or 60 now. Ameriprise, $293.71. Yeah, I think we picked it a lot lower when we picked it. It's worth $32 billion. It trades at under 13 times PE, and it pays a 1.5% dividend. This is the kind of stock that's not very volatile. So you're going to earn your 1.5%, and it's probably going to grow over time. TEL. What's TEL? Jeff, pray tell. TE Connectivity Limited. They're an Illinois company. They're a tech. They make components. $124.60. It's worth $40.5 billion. It's not a cheap stock. It trades at 17 times PE, and it pays a 1.7% dividend. So what I don't understand, Jeff, is 1.7% dividend. Is that good? Yes. SPY, the S&P 500 ETF Trust, is only paying out a 1.3% dividend. So your 500 kind of best stocks in the United States are only paying out on a market cap weighted basis 1.3%. So 1.7 ain't bad. ADI. What is ADI, Jeff? And by the way, do you share this information? Well, if you buy a run, you're the only one who gets it. And we a lot of times put this on the website. So Analog Devices, another tech darling semiconductor worth $85 billion. It trades at 55 times PE. So similar to Broadcom, this is a growth stock. Very much so. But wow, it pays a 1.9% dividend. And it's trading right just a hair, like 4% below the 200-day moving average. So pretty flat. Pays a healthy dividend. And it is a growth stock. I mean, if you believe in Analog Devices, it should grow its business. SWKS. If you're wondering whether I need a drink of water, the answer is yes. Skyworks Solutions, SWKS, trades at $125.85. It's worth $20.5 billion. It trades at a 15.2 times PE ratio. Pays a 1.75% dividend and trading well below its 200-day average. Not bad. T. Rowe Price. God, I used to have a mutual fund with them probably 20 years ago. T. Rowe Price is $149.22. It's worth about $34 billion. It's trading at 11.3 times PE, paying a whopping 3.8% dividend, 3.08% dividend, and trading, 25% below its 200-day moving average. So you're getting it at a discount. That's probably why the yield is popped up so much. Last but not least, IIPR. Innovative Industrial Properties, trading at a whopping 42.6 PE. It's $195 a share. It's a $5 billion market cap. It pays out a 3.5% forward-looking dividend, and it is down about 10% from its 200-day moving average. So you got a lot of stocks here. Most of them are trading at a discount. On a day like today when the market's down, a lot of these stocks are down. I'm going to show you a color chart. And again, I tweet it. If you want to follow me on Twitter, you'd see this right away without the explanation. It's at Chicago_Quantum. We are a registered investment advisor in Illinois. If you are an Illinois resident, if you live in Illinois, if you work in Illinois, if you're driving through Illinois, and you call me, I'm allowed to sell you investment advice. If you don't live in Illinois, I can still help you, but I can only help 5 per state. And then I have to register in that state, which is fine. It's a lot of paperwork with the feds, but we do it. So if you're in Illinois, this is great. I'll even stop by. We can have a coffee, talk about it. Our model picks rockets. Our model picks dogs. Our model picks a lot of things. And then one of the things it does is it picks top dividend stocks every day that we run it. So you'll notice I have a couple other stocks in there, right? These are stocks that I just kind of spitball. Oh, they look pretty good. They got a nice dividend. But they're not picked by the model as being the best dividend stocks. So I do track those as well. So let's take a look at how they're doing today. And again, I do not own these stocks. This is for the benefit of people who participate. So you see one up. Many of them are down now. Oh boy, down 2, 3, even 4%. So you're getting these stocks at a pretty healthy discount. If you buy them, let's say today after they fall. If you buy them after they go up, you're probably paying a little too much. So pretty good day for a discount. And good luck in the markets today. I hope you make a lot of money. I hope you enjoy watching the video. You take care now. Bye-bye.